Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Mark, welcome to the show. How are you?
I'm good. How are you, Sarah?
Good. I'm excited to have you back. You were on the show a couple years ago and you brought so much information, insights, knowledge. I wanted to have you back because now you're doing and you've pivoted to something quite interesting. I don't think we've talked too much about so far. But before we get into that, maybe for those that may not know you, a little bit of a background on what you do and your strategy of real estate investing and that kind of stuff.
Yeah, I mean, I've been doing this for quite some time. I've been investing in real estate for over 25 years, starting when I was a student, and I've done just about everything. Starting out with student rentals and single families, moving up to multifamilies, did a lot of multifamily value add. In the process, I've done private lending, I've done rent to owns, I've done small scale development, I've done just about everything sort of thing. And then in the past few years, we've actually brought hotels into the mix. And this is something we might talk about a little bit more, as you sort of alluded to. And those have some fantastic advantages that we're really excited about, and started my own REIT. So we're able to get investors from the general public and not just friends and family who are able to participate along with us.
Amazing. And you said you've been doing this for 25 years?
A little over 25 years. Yeah.
Very cool. So you've seen the ups and you've seen the downs and you've seen different market cycles. From somebody with 25 plus years of experience, what can you share with us on where we're at today, and any insights for people that are going through this for the first time?
I mean, first and foremost, there isn't just one market, there are multiple markets. So I actually have investments in Ontario, Quebec, Alberta, and BC. And I've also invested internationally as well. So I've seen where some markets are up and some markets are down. And we're actually experiencing that right now, where the Alberta market has been doing quite well lately, whereas most other markets outside of Alberta actually have been quite down, especially in Ontario. And I've seen that the opposite, where I had investments out in BC that were doing quite poorly. We had significant vacancy. We had significant downward pressure on prices, where prices were falling quite significantly, while Ontario at that time was on fire. So there's multiple markets to within Canada. There's multiple markets within Ontario. Are we talking about multifamily buildings, commercial, single family? So the main thing is sort of know exactly what it is that you're investing in and study that particular market so that you know what's going on with that one. And then you have to change and you have to adapt. And that's something that I mean, not only have I changed in the type of properties that I've invested in, but also changing in the strategies that you're using, whether it's a long-term buy and hold strategy, a shorter term burr or flip type strategy.
Okay. So that's a great insight. And 100%, I do agree. There's different markets and pivoting and switching strategies over time is important. And I think time in the market too. I mean, the more time that you're in it, you can withstand a lot more ups and downs of different market cycles and strategies as well.
And don't over leverage.
Yes.
As a lot of people have found out the hard way in these past couple of years.
Exactly. So speaking of pivoting for you and, looking at where you were before, and let's bring in hotels. Why did you want to get into that specific strategy?
So we were looking at, we were doing a lot of multifamily value add, as I said, and we were looking at the valuations, especially where we were investing in Southern Ontario, and they were making less and less sense. It became more and more speculation. The only way to make money was to turn over an entire building. And we saw that interest rates were about to go up. They couldn't stay low forever. And so we started looking for alternatives. And to be honest, we looked at investing in the US, we looked at different markets, and we stumbled across hotels. And what we liked about hotels were, one, they fall outside of the landlord-tenant board. And I mean, I know we could do an entire show about how broken the landlord-tenant board is in Ontario and how much that is a deterrent to investing in Ontario that, quite frankly, the politicians have no understanding of whatsoever. So it falls outside the landlord tenant board, which is fantastic. It allows us to do things a lot quicker. So when we were doing multifamily value add, we would look at a 3 to 5 year process to turn over a building just because you have to wait for people to move out and renovate the units, and it just takes time.
Hmm.
Whereas a hotel, as I joke, I mean, I can have everybody out by Friday. I mean, my reviews might suffer,
Yeah.
but legally, there's nothing that stops me from saying, "Hey, sir, I'm sorry. I know you had a reservation for this weekend. However, we've decided to close down the hotel for renovations. Here's your money back." And legally, I'm allowed to do that.
Hmm.
I'm not saying I do. I'm just saying I have that ability to. So that allows me to turn over a building so much quicker, which then means that you can do more buildings in the same amount of time. So we found that that's had a massive benefit for our investors in terms of the amount of money that we're able to make on those properties, and the speed that we're able to make it.
When did you buy the first hotel?
The first hotel we bought was in May 2021. So smack in the middle of COVID.
Okay. And
Yeah.
where was it and what was it? Maybe just give us some of the details on that.
So that was a 26 unit hotel in Montreal.
Okay. Why Montreal?
So Montreal was interesting because one, the Airbnb, I want to say bans, but it's not usually bans. It's usually legislation and restrictions. But the
Hmm.
Airbnb legislation that was coming out slowly in Ontario had been out in Quebec for years. So Airbnb actually started in Quebec, and the Quebec government, which has a sector that's essentially devoted to tourism, automatically put all Airbnbs underneath this provincial-wide governing body and had provincial-wide legislation right off the bat governing Airbnbs. So Quebec had, I mean, so there's a few reasons why we went to Quebec. So one, price per door or price per unit is quite attractive out there compared to Southern Ontario. To the average income that you get from those properties is quite high, especially in strong tourism destinations like Montreal and Quebec City. So you've got high income and a low cost per door. You've got legislation that is helping you as somebody who has a hotel license drive people to your door and remove the Airbnbs and remove the competition that way.
Hmm.
And on top of that, Montreal and Quebec City are two of the top tourism destinations in Canada. So
Hmm.
there was just a lot of things that brought us out there that aligned.
Yeah.
And yeah, I mean, there's obviously difficulties being somebody from Ontario working and investing into Quebec. Everything's done in French, everything the entire legal system is
Mm.
different in Quebec because it's based on a difference the French
Mm.
system versus the British system. But so there's obviously some additional things that you have to keep in mind when you're investing in Quebec, but certainly the advantages far outweigh the disadvantages.
Okay, awesome. So how did you find the hotel? Was it on MLS? Was it off MLS?
Off MLS. And I mean, since then we've bought three more hotels.
Mm.
We've bought some that were on, one was on MLS, and then the other two weren't, where we had people come to us.
Okay, so they know that or they knew that you were in the market looking for hotels.
Exactly. And we had realtors that also knew that we were looking.
Okay,
And so they brought
awesome.
options over to us.
Okay, good. So, like, if you can share some numbers, like, what is like that first hotel, like price wise? Like, what did you purchase it for? What did it look like? What did you put into it? What was the strategy for it?
So, I mean, in a way, the strategy is the same as a multifamily value add strategy. So just with multifamily value add, I look for first and foremost location. I
Mhm.
want prime urban areas that I know are always going to be in demand, whether it's 5 years from now, 10 years from now, 50 years from now, there's always going to be demand for that chunk of real estate, that chunk of land,
Mhm.
regardless of whether it's a hotel or whether it's anything else. I look for things that are structurally sound and mechanically sound. I look for things that are cosmetically dated, and I look for things that aren't being managed as effectively as they could. So this property we bought, like I said, it's downtown Montreal, right in the Latin Quarter, right in a fantastic tourist region of Montreal. We purchased it for $3 million. It, like I said, great location, structurally sound, quite dated, which is what we're looking for. And then the management was doing it sort of the old school way, which is again what our target here is. We're looking for things that are mom and pa owned and operated. If you think about baby boomer owned, that they're looking for a way to retire. The kids want absolutely nothing to do with the business because they've seen mom and dad run it the only way they knew how, which was they're working the front desk, they're doing the cleaning, they're doing the maintenance, they're there 24 hours a day, 365 days a year.
Mm-hmm.
So we come in and offer a way to for them to exit, which is what they're looking for. Um, we put about just over $1 million into this property in renovations and carrying costs, and we just had it appraised a few months ago at 7.1.
That's amazing. And sorry, that was from May of 2021, you said.
Yes.
Okay. All right.
Yeah.
Awesome.
So this one took a little longer because the first year and a half was just COVID.
Mm-hmm.
So for instance, the last one that we bought, September 2022 in Quebec City, we bought that one for 2 million, and we just had that one appraised for 3.6 million, and we only had to put in a couple $100,000.
Nice. Okay. So how many hotels are you currently operating and managing and have you purchased?
So we purchased 4 hotels,
Mm-hmm.
3 in Montreal, 1 in Quebec City. We have 3 of them up and running, 1 of them still under renovation right now. And then we have all the other multifamilies as well that we still, I mean, I still like multifamily.
Mm,
I mean, multifamily is still great. And I still have multifamily as part of the portfolio. The REIT still has multifamily as part of the portfolio. Multifamily has great stability. And let's face it, banks love multifamily, whereas they're not quite as keen on hotel and
mm.
hospitality. So there's synergistic effects to having both multifamily and hospitality in the portfolio.
Yeah, I mean, because it becomes a whole business too with hotels. Right now, you've got the staff, and like, are you running the businesses or are you just kind of just doing the hotel piece?
No, I'm a real estate guy. I'm not a hotelier. So we have a great partner that we've brought in who is a Quebec-based hotelier that
Mm,
has some other properties, and we brought them in to operate ours. So we actually work on a triple net lease. So
okay.
we lease the properties to them. They run it. They do all of the guest communication, all that sort of stuff. They're responsible for bringing people in, taking care of them when they're there, and cleaning up after them when they leave.
Nice. So it's more passive than it would have been if you were also in the business.
Yeah, I mean, there's still more moving parts in a hotel than there is in a multifamily property.
Hmm.
There's people going in and out every single day as opposed to staying there for years.
Hmm.
So, and we're still responsible for providing the product. So there are more pieces to that product that we're responsible to provide, but it's it's again focusing on what I know, which is the real estate, and letting another expert who's great at the hotel part focus on the hotel part.
Hmm. That is interesting. So you've got the hotels and you mentioned the REITs and you mentioned obviously like financing is harder
Yep.
to get typical financing for these types of, hotels versus multifamily.
Mhm.
Um, let's talk about what the REIT does or what it is and how you built it and pieced it together. Because I think a lot of people that are, maybe more experienced have maybe heard one or two people having syndications or REITs or different things like that. And they're like, how do I even put one of those together?
Yeah, so it's obviously a legal structure, so it's the lawyers that put it together. Choose your lawyers wisely because choosing the wrong lawyer just leads to massive legal bills and maybe not the best product. But yeah, you have a lawyer that's competent and comfortable in creating these structures. So it's still expensive. We're talking anywhere from 150 $250,000 to get all this legal structures created. But once it's up and running, it allows anybody to invest with us. So initially when we were doing this, it was really only friends and family, a couple of accredited investors that would come along and help us out and partner with us. So now that we have the REIT, anybody, I mean, accredited investors, even eligible investors can invest with us. So that's somebody who makes $75,000 or more. Um, and also we can take registered funds, so RSP, TFSA, all those sort of things. So it just the purpose of opening up the REIT was to allow more and more people to be able to share in what it is that we're doing.
Hmm. And like, how do you operate it? Like, you have to have, people on your team, like other than your lawyer, like, how do you operate the REIT?
So I mean, you can do. You can have everybody in-house or you can outsource to third parties. We've chosen to outsource to third parties. So obviously we have a good legal team, we have a good accounting team, and then we also have people that are the trustees that are operating things with us and helping us out, transfer agents, that sort of stuff. So it's it costs money to create, it costs money to maintain. I mean, getting into a REIT is not a quick and easy, cheap thing to do.
No. Well, you're saying 150 to 250 and like all the time and going back and forth. So
Oh,
then
yeah.
you've got to
That's just to
obviously
start it up, not to keep it going. You still have annual costs on that as well. Yeah.
I bet, yeah. So you've got that and you obviously want to acquire, properties to put into that. I'm assuming there's a marketing team or somebody that brings in the investors. Like walk us through what that looks like.
Yeah, so all the investors have to come through an exempt market dealer, which is just the regulations in Canada. So we have a couple of exempt market dealers that we work with. So they are advertising for investors themselves that come in and they do the due diligence, the suitability, know your client, know your product, all those sort of legal things. They go through and do all of that to bring the investors. Obviously, for ourselves, we're always obviously looking for investors ourselves, just whether it's word of mouth or whether it's social media advertising, any of those sort of things.
Oh, very cool. And when did you create the REIT?
The REIT was launched in just last year, just over a year ago.
Okay, so prior to that, it was like you said, friends and family accredited investors coming into your deals, and then
Yep.
you know what?
Um,
Sorry, go
I
ahead.
was just gonna say, and we also partnered with an interesting crowdfunding company out of British Columbia called Addy or Addy Invest, and so they're one of the few real estate focused crowdfunding companies in Canada,
Hmm.
and we've had some really great success with them. We had three of our properties up on their shelf where they brought in anywhere from 500 to 900 investors per property.
Nice, that's good. I think there's like another company called Front Funder as well that does something similar.
Yeah. Front
Fun
Funder
to
does something similar. They're actually EMD as well, so they do things a little differently. But yeah,
Cool. Okay. All right. Nice. So if somebody is, interested in hotels, what are like maybe three key tips that you can give them in terms of, before you buy, here's what to consider.
well, first and foremost, like you alluded to, it is a business. It's not a passive real estate play. I mean, even people who've done an Airbnb should realize that just owning a single Airbnb, the reason why an Airbnb makes more money than a long-term rental is because it's not just a passive real estate play. It is a business on top of a real estate play. And obviously if you're in a hotel, then it's just that much more because you're 20, 30, 40 units as opposed to one unit. So the big thing is realize that with a hotel, you're running a business.
Hmm.
Whether you're doing it yourself or whether like me, you're having a third party come in and do it, you're still running a business on top of the real estate, and there's significantly more things in motion with that. Um, I always go back to, I mean, as I say, with real estate, location, location, location. So for me, I'm always choosing prime locations, as we talked about, that are always going to be a great place for that real estate, whether it's a hotel or whether it's something different 50 years down the road.
Okay. All right. Awesome. And do you have partners or are you doing this on your own right now?
No, I've got a business partner, Dave, who we work with. So we work well together, and we partnered up about half a dozen years ago.
Nice.
Yeah.
It's I will say having the right partners where you're each bringing something that complements the other person without having the same skill set, but having different skill sets has been huge. And, like even looking at my partnerships, amazing. But, sometimes you hear about partnerships going very sideways and not working out. And what are some of the things that you have done with yours to make it a success?
Yeah, I mean, Dave and I are interesting. One, Dave's as I tease him, he's about 15 years younger than me, so I've got a little bit more experience than him, but at the same time, he's a little bit more aggressive than I am, just because of where he is, the stage of life that he is. So we've got a little bit of a push and pull or a gas and brake type of thing. We certainly have different skill sets as well, which complement each other. Um, I mean, it is a marriage, for lack of a better term.
Hmm.
So you want to make sure that I mean, building a REIT, we know that we're in this for the long term together. This is not a getting a JV partner for a flip where you're going to be in it for a year and then out of it. This is something that you need to make sure that you can communicate well. You need to make sure that you have complementary skill sets. You need to look at sort of the lifestyle and what the goals are, whether or not, like what it is that you're looking to get out of this business that you're building.
Hmm. Yeah, absolutely. Because a great partnership can really propel you forward, and the wrong partners together can really be quite detrimental. So
Yeah,
having,
100%.
all that stuff organized and ahead of time. Where did you guys meet?
It was actually a property manager that introduced us.
Okay.
So it was a mutual property manager, and she simply said, "Hey, you should meet this guy, Dave. He's a young guy that's getting into real estate and doing some good things at the time." So yeah, I met up and admittedly I resisted partnering up with him for for a few years,
Hmm.
just because he was in a state where he was looking to go fast and acquire as many properties as he could.
Hmm.
I was in a state where I had a very young family and actually had sort of taken a break from real estate.
Right.
So I wasn't interested in doing long hours. I wasn't interested in going hard and attacking the market. I was I was busy at home with diapers.
Yeah, no, that makes sense. So today in 2024, what are you working on? What are some of the goals?
So I mean the thing right now is the REIT is obviously the main thing. So we've got projects that are on the go in terms of renovation. So obviously we need to get those completed. Anybody that's been in the multifamily world has seen the tumultuous last couple of years, or even year through CMHC, where they announced some different rules back in September of 2023
Yeah,
that threw everybody for a loop. And then just a month ago they changed the rules again.
again, yeah.
And so rolling with the
Again, with
punches
only
now.
3 weeks of like being able to submit your stuff if you
Oh
were in
yeah,
the middle of
yeah,
a project.
yeah,
So thanks CMHC for
yeah,
nothing.
yeah. They give you lots of notice. So yeah, so we've got some projects that we're in the process of refinancing, and so carrying those projects through. We just acquired a new building just 10 days ago, so bringing that one on board and bringing that sort of into the fold so that it's up and operating smoothly. And then we've got another property that we're looking at acquiring here in the next few weeks as well.
These properties, are they on or off market?
Um,
Or I mean, just the properties in
yeah,
general, like what you've purchased. Like, is it
yeah.
mostly realtors bringing you deals like because of networking and knowing that you're in the market, or has it been, you and Dave sourcing and finding on MLS and going that route?
I mean, I don't really care where the deals come from. I've purchased on-market deals because they
Mm-hmm.
existed, and
Mm-hmm.
I've had people come to me with off-market deals that were
Mm-hmm.
also great deals, so we bought them as well. And I've also gone direct to owner.
Mm-hmm.
So I mean, I joke. I mean, similar to mortgages. I don't really care where the money comes from. I care what
Mm-hmm.
the terms are for the money.
Mm-hmm.
When it comes to where the properties come from, I don't care if they're on market, off market, direct to owner. I care what is the deal and
Mm-hmm.
how can we structure it so that it becomes a great deal for the REIT.
What do you think it is that you did in order to get access to all of those options, right? Because sometimes people that are starting out are, looking on MLS, or maybe they have one realtor. Like, what are, the ways that you've achieved having visibility on, many different sources of deals?
I mean, admittedly, I do have my real estate license. I got that a number of years
Okay.
ago.
Okay.
So I have realtor connections both personally and professionally. So there's that. Um, And so, I mean, I look on MLS just like anybody else. I just
Hmm.
have access to a tiny bit more information. But quite frankly, in the land of House Sigma, I don't have that much more information than what the general public has. But yeah, realtor connections are big. There's a lot of realtors, especially right now, that have properties that are off market that the seller's willing to sell if there's somebody that's willing to come along and buy it, but they don't necessarily want it out and blasted all over the
Hmm.
internet,
Hmm.
especially when you're in multifamily space. A lot of times multifamilies sellers don't want to go on MLS. And same with hotels. A lot of hotels don't want it known that they're up for sale because they feel that while they're waiting for that deal to happen, if people knew that they're up for sale, it would affect their business.
Hmm. Absolutely. Awesome. So Mark, any last insights, before we get your contact info or however you want to share, for the listeners?
Yeah, I mean, if I'm going to give advice, it's keep in mind that real estate is slow. There are ways that you can make money quickly in real estate, but even that isn't a day. It's not like trading stocks. Real estate is something that you you buy it and you forget about it, and 10 years later you think, holy cow, look at that. But it's sort of know what your goal is and know what you're willing to do. If you want to do real estate fast, that takes a certain skill set and a certain number of hours and dedication. And the approach that you take is specifically designed for fast. If you're looking at going slow with real estate, then that takes a different amount of time. So if you've got a very limited amounts of time, there's certain things that you can do with real estate and other things that you should probably leave for people that are doing it all the time. Don't over leverage no matter what you're doing, because as people have found out right now, people that have over leveraged are in trouble. Yeah.
Okay. All right. Yes. Don't over leverage. That is important. And time in the market, I do agree with as well. And these are slow plays the majority of the time. Where can my listeners reach out and find out more?
So we're on Instagram at HoneyTreeGrow. Also website is honeytreegrow.ca. That's probably the two best ways to get a hold of us.
Amazing. Mark, thanks so much for being on the show again. And, I'm sure we'll have you back again because we can take it so many, like even multifamily. We could have had a whole conversation on multifamily, but,
oh yeah,
we only have about half an hour. So thank you so much for your time today.
My pleasure, Sarah. Thanks for having me.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?